Welcome to Overnight Market Brief, Pre-Market Edition by AGI Era. Good morning. Today is Wednesday, March 4, 2026, and it is shortly after 8 a.m. Eastern Time. This is your executive summary of global market developments, analyzing the overnight flows in Asia and Europe, the key macro drivers, and the setup for the North American Open. The prior session and macro context. First, a look back at yesterday's close. Wall Street finished on a defensive footing, driven by a broad risk-off sentiment. The S&P 500 settled at 6817, down 0.94%, while the Nasdaq 100 declined 1.09% to close at 24,720. Crucially, the session was driven by escalating geopolitical concerns and their impact on commodity markets. But the real story right now is in the macro assets. Right now, the 10-year Treasury Yield is trading at 4.081%, up 0.44%. The U.S. dollar index is slightly lower at 98.852, while crude oil is marginally lower around 74.47. Gold, a traditional safe haven, is notably higher, up 1.19% at 5,184.59. The slight uptick in yields and the strength in gold underscore a flight to safety dynamic, even as the dollar shows minor consolidation after recent gains. The broader narrative of geopolitical risk and its potential to drive energy prices higher continues to underpin market sentiment despite crude's current fractional dip. Overnight session, Asia and Europe. Moving to the overnight session, global markets have been largely risk-off, reacting to the persistent geopolitical backdrop. In Asia, the picture was unified in its weakness. In Tokyo, the Nikkei 225 finished down 3.61%, tracking the broader regional risk aversion and concerns over energy prices. Meanwhile, in Greater China, the Seng declined 2.01%, while the Shanghai Composite fell 0.97%. The widespread declines across Asian equities were primarily driven by the overarching geopolitical shock and its implications for global stability and commodity markets. In Europe, major indices are trading with a cautious tone. The price action suggests a continuation of the risk reduction theme seen in Asia, providing a defensive lead-in for U.S. traders. Italy's Q4 GDP was confirmed at plus 0.3% quarter-on-quarter, with the January jobless rate falling to a 22-year low of 5.1%, but these positive local data points have been overshadowed by the broader global sentiment. U.S. futures and the open. Turning to the U.S. pre-market, equity futures are largely flat with minimal movement. S&P 500 futures are trading down 0.05%, while Nasdaq 100 futures are up 0.06%. The relative performance suggests a slight, almost imperceptible rotation into tech, but the overall picture is one of consolidation following yesterday's declines, as investors await further catalysts. The daily catalyst. Looking ahead to the session, investors are focused on three key catalysts. First, the ongoing geopolitical tensions and their potential to further impact commodity markets and global risk sentiment. Second, China's annual parliament meeting, where a roadmap for the tech race with the West is expected to be unveiled, carrying significant implications for global supply chains and innovation. And finally, the European economic data, particularly the confirmed Italian Q4 GDP and jobless figures, which offer insights into regional economic resilience amidst global headwinds. Given the overnight setup in rates and the dollar, the market's path of least resistance appears to be range-bound with a downside bias, pending any surprises from the evolving geopolitical landscape or policy announcements. That concludes your overnight market brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.